You know, for decades, there's been this one book that's pretty much a rite of passage for anyone who gets serious about trading. It's a guide through the treacherous landscape of the financial markets. And it's written by a psychiatrist who became a trader, Dr. Alexander Elder. So today, we're going to distill his essential wisdom and map out his core philosophy, a journey that's really as much about mastering yourself as it is about mastering the market.
It all starts with this promise, right? The idea of ultimate freedom. No boss, work from anywhere on the planet. I mean, that's the dream that pulls so many of us into this world. But Dr. Elder's really quick to point out that this freedom, it isn't just handed to you. It's something you have to earn. And earning it all comes down to a single choice you're forced to make right at the very beginning of your journey.
So, Elder says that when you enter the market, you immediately show up at a crossroads, and there are three very different paths you can take. Now, they might look kind of similar at first, but trust me, they lead to wildly different places. And here's the thing, every single one of us has to make this choice, whether we even realize we're making it or not.
And wow, this table just lays it all out, doesn't it? First, you've got the investor, who's taking the long, steady path, relying on patience and foresight. Then you have the trader. This is the person navigating the deep, dark forest, needing sharp analysis and incredible discipline just to survive. But then, look at that third path. That's the gambler. They're not driven by a plan. They're driven by the thrill, the action. And their path, as Elder puts it so perfectly, leads directly into the swamp. And here's the most crucial takeaway. A huge number of people who think they're traders are actually just gamblers in disguise, marching straight for that swamp.
Okay, so if the trader's path is this super dangerous forest, how in the world do you actually navigate it and stay out of the swamp? Well, this question leads us right to the absolute core of Dr. Elder's philosophy, what he calls the three pillars that hold up any successful trading career. It's a really simple question, but the answer is so profound. And let me tell you, it has absolutely nothing to do with some secret indicator or having a faster computer. The real difference, the thing that separates the pros from the amateurs, lies in this balanced, three-part framework that, honestly, most people completely ignore.
And here they are. Pillar 1, psychology. Can you master your own greed and fear? Pillar 2, your method. Do you have a sound, repeatable system for analyzing the market? And Pillar 3, money management. This is your survival skill. This is how you control risk. Now, Elder compares this to a three-legged stool, and it's a perfect analogy. If any one of those legs is weak or just missing entirely, the whole thing comes crashing down. You can have the best trading method in the world, but if your psychology is a mess or your risk management is sloppy, you will fail. It's really that simple.
All right, to really get why that first pillar, psychology, is so critical, we first need to tackle this big idea from the academic world that basically tells traders their efforts are totally useless. It's a really popular theory, and, on the surface, it makes a lot of sense.
So this idea is called the efficient market theory. The gist of it is that since all the known information is already baked into the price of a stock, you can't consistently beat the market. It's like trying to win a poker game where everyone's cards are already face up on the table. So according to this theory, trying to be a trader is a fool's errand.
And this is where Dr. Elder's background as a psychiatrist is so brilliant. He points out the theory's Achilles heel. It's a beautiful idea in a sterile lab, but it completely falls apart the second it meets actual human beings.
And this slide just nails the disconnect. The theory assumes we're all these rational actors making perfectly logical decisions based on data. But what's the reality? Markets are driven by emotional crowds, where greed and fear are constantly at war with logic. Prices can get completely, wildly detached from their real value. And right there, in that gap between the rational theory and the emotional reality, that is where the disciplined trader finds their edge. They actually profit from the predictable, emotional mistakes that the crowd makes over and over again.
Okay, so we've covered the philosophy, but Dr. Elder is also an intensely practical guy. He says that before you can even really start working on building those three pillars, you first have to get past some real-world obstacles that trip up nearly every single beginner.
Most people think trading is a zero-sum game. You win, I lose. But Elder argues it's actually a negative-sum game for amateurs because of these hidden costs. First, you've got commissions, the fee your broker takes on every single trade. And second, there's something called slippage, that tiny difference between the price you click and the price you actually get. Each one seems so small, but together they act like a slow, constant leak, just draining a small account until there's nothing left.
And this brings us to a number that, honestly, it shocks a lot of beginners.
Dr. Elder is absolutely adamant about this. You should not even think about trading with less than $20,000. Now, why so much? Because a small account gives you zero room for error. He compares it to flying a plane too close to the ground. The slightest mistake, a little bit of turbulence, or just the random noise of the market, and you crash. A larger account gives you altitude. It gives you the financial cushion to survive the inevitable losses and stay in the game long enough for your strategy to actually work.
At the end of the day, what Dr. Elder's work really reveals is that succeeding in the market isn't about finding some secret formula on a chart. It's about building the 3 pillars inside of yourself: the discipline to follow your rules, the emotional control to stand apart from the herd, and the risk management to survive your own mistakes. In the end, he says, the market is just a mirror. It reflects back every single one of your weaknesses. So the real question isn't just about whether you have the capital, it's whether you have the character. Are you ready for that kind of journey? A journey of self-discovery?